Hey, what's up, guys? Houston here. Look, I'm going to tell you exactly what you should do step by step when you're trying to get your credit cards and by what age you should be trying to get your credit cards. All right. So let's go from 0 to 18. All right. Now, here's the thing about it from 0 to 18. Usually with some banks, they will let your kid be added on as an authorized user. So you want to start your kids on as an authorized user. And so the age for that usually may go fluctuate between 12 to 14 years of age, adding your kid on as an authorized user. Okay. And so the earlier you're able to get them on, the longer they start to have a credit profile, right? Now, here's something I would definitely tell you guys is that I would check my kids' credit profile, okay? If they're between 14 and up or whatever, I would see if their social security number has been used, okay? You may want to go to like Credit Karma or something like that, put their information in to see if there's some type of file exists. And the reason that I'm telling you this about your kids is one, that there's idiots out here that's been creating these CPNs, credit privacy numbers, right? And they're trying to create something out of the blue. However, they may have end up using your social security number or your child's social security number. All right. That's the reason why. So then when your kid turns 18, your kid already has a bad credit score and you have no knowledge of it. All right. So that's number one. All right. That you definitely should check. Okay. Other than adding the authorized users. Then, like if they turn, and you can do this usually, some banks will let you do it with a secured credit card when they're about 16. All right. Most of the time it's probably going to be a credit union. All right. And so doing it with a secured card, choosing the right institution. Some of them you may want to check out if for your kids and stuff. It's from like Navy Federal with their secured cards, but at the same time, using the secured card, making sure they watch out for it. Also, like a lot of kids now, they have Cash App, right? And even like with my kids, they have debit cards and stuff like that. However, they choose to use Cash App. And one of the things that I'm trying to break them from is using the Cash App is because, one, they're over 18. Number two, they're not understanding the importance of building credit, even though I teach it. And they're on our credit cards as authorized users. So they have strong credit, but again, them not understanding the importance of credit and what it actually can do as they get older. All right. So that's something, even for you guys that are just starting out, these are the same things that you would do if you're starting out. All right. Now, Navy Federal, then you have United Nations. Okay. And the reason why United Nations, this is very important because this is better than Navy Federal, is because with United Nations, not only would you be able to help them get a credit card, a secured credit card, but United Nations offers secured loans. And the thing about it, they offer the secured loans where they can spend up to 150% of that secured loan. So that means that you put $100 in a secured account for the loan, right? They would allow you to spend up to $150, okay? So that's what I mean by the 150%. All right. Now, for ages 18 through 25, and here's the thing about it, I'm going to tell you, a lot of people, they look at the big credit cards and stuff like that. I would tell you, I would not focus on the big credit cards. I would always stay with either fintech or credit unions. Okay. I would stay with like your regional banks are okay. But going with your major banks and stuff, I would not start there, okay? Like some people may start with a Chase Rise, but you have to have at least a 600 credit score. But when you just starting out, building out and stuff, I would probably work with the fintechs, as well as with the credit unions because they give you more flexibility, if that makes any sense. All right. So like with Patel offers credit cards up to $10,000. All right. So that's the Patel 1 and 2. And then they have the Patel Rise that charges an annual fee. Okay. That's when you really have bad credit. But when you start now, depending on the age, when you're 18 and 25, this is where I would consider going. Even like with the Apple credit card, all right? Now with the Apple credit card, still with Goldman Sachs, it uses TransUnion FICO 9. So it's a low-hanging fruit. So remember we talked about adding that authorized user? So by you adding that authorized user helps boost up the credit score. Now, here's the thing about it with Apple. Some people get denied is because they may not have enough revolving accounts on the file, and you still get denied. Even if you have an 800 credit score, you still may get denied because they may feel that the credit file is too thin. All right. So that's the reason why I'm trying to break this down to make it much easier. Then you have companies like Credit.ai. They give you a $1,500 line long as you have deposits and stuff going into your business bank account. They'll give you a credit card. All right. So now with Credit.ai, they will only report to like Experian and Equifax. They won't report to TransUnion. Then you have the extra debit card. That's similar to Credit.ai. Again, looking at your bank account, looking at your deposits, and then determine how often you're using your debit card and stuff like that. And for your bills and stuff, it calculates that. And that's what the balance they report to the credit bureaus. Okay. So I'm not really focused on the credit builder loans and stuff like that, credit builder cards and stuff. I'm looking at things that I know that are unsecured, that just goes off of your bank account. All right. So I hope that makes sense. Now, from the age of 25 and up, here's the thing about it. You should really be focused on balance transfer credit cards. Okay. And here's the reason why. Because with the balance transfer cards, depending on the institution, they may give you balance transfer checks that you can actually use that money and transfer from the credit card and transfer the balance from your credit card over to your checking account, right? So if you need to use that money, because at age 25, you're getting into like starting your business and things of that nature. So as you get older, you start being more strategic on the way that you think about money for most of the time. All right. So that's the reason why. And so with some of the balance transfer cards, you want to go look for ones that offer the high limits as well. All right. So you have Fidelity. OK, so with Fidelity, they use Elan Financial. OK, and so with Elan Financial, usually with Fidelity, all you have to open up is all you have to open up is a brokerage account. And so by you opening up a brokerage account, then you qualify to apply for their credit cards. And because you open up the brokerage account and you're using Elan Financial, more likely you're going to get high limits. That's like $5,000 or more. Okay. And so again, with Elan Financial, they do offer convenience checks to transfer. All right. Then you have like PNC Bank. Like PNC Bank, they have a cash limit that starts at $5,000. It's a FICO 9 scoring. And that's another thing that's real important in terms of when you're trying to choose the credit cards to start out with by age and stuff, you always want to try to find the easiest financial institution. That's the reason why I continue to tell you, look for banks that are offering FICO 9 scoring, Vantage 3, as well as Vantage 4 scoring, okay? Because again, they will support you adding like the authorized users and rental and utility payments. That's the why I'm saying this, all right? So then you also can go back to Navy Federal. Now, of course, once you're able to join Navy Federal, then you're going to look at the Navy Federal cash rewards because that starts out at $5,000, okay? So depending on your situation and the relationship with Navy Federal, because they are a relationship type of bank, then even with a low credit score, if you have bad credit, but you've been with them a long time, you have multiple accounts, they still will take into consideration of the relationship and still start you out with a high limit credit card. All right. Now, here's one credit card that I put on the list. And the reason I put it on the list, because they're a little more flexible than some of the other major banks, and that's American Express. But you do not want to go after the American Express Gold or Platinum card, okay? You don't want to go after those. The reason is because those are your charge cards. Now, you can actually say they approve you for $20,000 is your limit. You can say, hey, I'm gonna use about $5,000 over the next 6 months, and they'll put that on a regular revolving payment plan for 6 months. But then the remaining, you would have to pay that. Okay, so that's something that you have to be aware of. Now, another reason for this here American Express Blue Cash I would tell you to get is because it gives you 15 months of 0% interest on purchases and balance transfer. The only downfall from it is that they don't give you convenience checks. Now, with Wells Fargo, if you want to go to Wells Fargo, they use a FICO 9 score, and usually Experian or Equifax FICO 9, okay? And so the credit card you want to go with them, if you want to get a high limit starting out, you probably want to look at their Wells Fargo Reflect. And the reason is because it gives you 21 months of 0% on interest and balance transfers, plus they give you the convenience checks to actually liquidate that card as well. Plus, they also, like, say if they start you out at 5 or 10,000 and you think that you need more, you can call in and ask them to reevaluate to see if they'll do a soft pull to give you a higher limit. Okay, and so that's with Wells Fargo. Now, another credit card that you want to look at is with BCU, Baxter Credit Union, their cash rewards card. This card starts at $5,000. Now, why they are on the list is because with BCU, they use Vantage 3 TransUnion. Okay, so if I'm doing a good job, give me a thumbs up, leave me a comment, let me know if you have any of these cards already, okay, and you're trying to add to. But at the same time, going back to BCU with the cash rewards, again, this is another big perk about the credit unions, because when credit unions do a hard pull on your credit, you can actually, most of the time, is actually use that to double dip or triple dip. And what I mean by that is that you can apply for the credit card, a loan, and a car loan, or they may offer a line of credit. Now, if they offered a line of credit, I would tell you to go for the line of credit. That's the unfortunate thing about Navy Federal. They don't offer the line of credit, okay? Now, the next one is the State Department Federal Credit Union. Why? It's because they have a Visa Platinum card, starts at $5,000, goes all the way up to $100,000. Plus, using a hard pull, you can get their personal loan that goes up to $100,000. Plus, if you get the personal loan, then you don't have to make any payments on that personal loan for the first 90 days. Okay, so that's the reason why that they're on the list. Then you have GSA Federal Credit Union, and they have a Visa Platinum card as well that goes up to $5,000. So I hope this video helps you. If you have any other questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.